All right, welcome back to the Scotty Pog channel. I am Scotty. This is just a little update. Today is October 7th, 2024. We're just after the market close on a Monday. You can hear I'm coming down with a little something. If you hear me sniffling, I beg that you just forgive me, bear with me. But I wanted to get back on here and update you guys on a couple things. Here's the disclaimer. It basically says I'm an idiot. I'm also learning. You know, this is just for me to be able to reflect on things that I've done. I'm just trying to learn the same as you guys are. I'm just trying to catalog it. Okay. So if you guys watched the previous episodes, you'll know that we've been running the wheel on GameStop. I've got this spreadsheet here that just kind of explains exactly what we've been doing. The first part here shows exactly when I bought these shares. And you know, you'll notice immediately that some of these shares were bought way higher than the current stock price, right? And that is a downside of the wheel strategy, right? If the price goes down significantly, your left bag holding, you know, premium gets less and less, and you know, you're just trying to hope that you make your money back. But this is basically every share that I've bought. This will come out to 104 shares. I bought 4 shares. What I thought was the bottom, right? This is a way better price than what we bought up here. And the idea with the wheel is that, you know, you make 1% a week. You use it to continue buying shares to lower your cost basis. And so these are the two numbers that we need first for this spreadsheet, right? We have the total number of shares here. We also have the total amount of money spent here. And some very simple math will get us to a cost basis of $29.22. Okay. Now, the wheel works when you sell covered calls on the shares that you own. So we own 100 shares here. We can sell one covered call because each option is 100 shares, right? So here are the covered calls that I have sold. You can see the dates at which I sold them, the mechanism. These are the strikes, right? So as you know, if you watch my last video, if you do the wheel yourself, the price closes above this number, my shares are called away. Obviously, this hasn't happened. You can see no's here. And then this is the money that we have collected thus far. Selling these. This is like I said, I don't claim to know everything. I'm just documenting what I do. You can see here that the price was running up. I thought it was going to go above my strike. I panicked and bought to close. I lost money for the first time in 4 months. The same day I sold another covered call at a higher strike, made more money back. I don't know if that was the right thing to do, but it was the thing I did. And then just to look at this. This is the total amount of money I've made thus far. To get the updated cost basis, we would do, I think this minus this divided by this. And so as you can see here, our updated cost basis is about $2.70 or so below the cost basis of the shares that we actually purchased. So, just to kind of sum this up, I've been buying shares. I've been selling covered calls for approximately 4 months now, and lowered my cost base is $3. And when I started this, I talked about how it was theoretical that you could get to a $0 cost basis, obviously with lower volatility and the price sinking. The premiums are going to be lower, and it's going to be tougher, and it's going to take a longer time to do that, especially when if I was selling at the money option, wouldn't be so tough, right? Wouldn't be so tough to sort of to gain higher premiums. But as you can see here, I'm selling 27, 20, 27, 50, 29 strikes. If I were to sell it today, you're making $4. You're making $2. You're making $4, right? The closer to the money that you sell, the more premium you're going to make. However, you run the risk of your shares getting called away and losing the difference between your cost basis and the strike price. So I don't know. I'm gonna continue doing this. I'm gonna continue this experiment. I'm just gonna stick to the plan and execute the plan and see how it turns out. Additionally, I've been doing the I guess before I do that, I'll show you this. This is every single day I've had this year, and as you can see, since I began selling these covered calls here, this was my last month not selling covered calls, I believe, ish. It's been mainly profit, and I have sort of revived my account, I guess. Like I said, I don't claim to be the best. I don't claim to know everything, but I do know that this number and this number are bad. And when I started selling covered calls, the numbers got a little better. So hopefully somehow I'll be able to make this back before the end of the year. We will see. So now to my other one, right? This is CleanSpark. It's a Bitcoin mining company based out of the United States of America. Their price is significantly lower. However, just like every good trader, you can see that I bought much higher than the current price. I think that a lot of people who sell covered calls, this was very popular for a couple people. And I think the price kind of got away from us because the price was bouncing between $15 and $23 and then tanked. So I was in here August 2nd for 200 shares at a cost basis price of $14.86. Price is way lower than it now. I've since used the profits to buy 2 lots of 10 shares, so I currently own 220 shares for a total price of this right here. This is my cost basis. This is the updated cost basis. Here are you can see here I sold a cash secured put at $15, which ultimately was assigned to me. Again, the price started to run on me here, and so I had to roll out. And as I sit here and look at this, I don't know how you feel about Bitcoin. It's my personal belief, again, this is not financial advice, but it's my personal belief that a year from today, Bitcoin will be higher than it is right now, or we will be somewhere in a bull cycle. I believe that Bitcoin ancillaries such as miners will continue to go up, and I believe that I am positioned well to take advantage of that, especially CleanSpark. This is an American company. They own a large percentage of themselves. Their hash rate is very high, comparatively so to somebody like Mara, who gives like a lot of I don't know if you guys have watched the Dan Hillary video about Mara and their 10Q or it gives like a lot of stock compensation, whatever. This is the company that I've chosen to ride with. Outside of Bitcoin MicroStrategy, this is the ancillary Bitcoin sympathy play that I'm playing. CleanSpark. So, again, the price started to run on me here. I did not want to sell at these prices. And so I had to roll way out. So again, this is a mistake. But I have a November 8th expiry. And I paid money to get it because I had to roll that far out and this high up to get a decent price to get out of that trade. But we're learning. So over the past 2 months, I made $162. The same, the same mathematical equations here to figure this updated cost basis out. That's where we're at. And then I kind of wanted to talk about one more thing. So I've been really into MicroStrategy stuff lately. I believe in that company. I believe in what they're doing. I believe in the future of Bitcoin. But I want to talk about living in an echo chamber because I have realized that the Twitter circle and the things I see online, etc., all tell me one thing. It is that Bitcoin good, MicroStrategy good, and that number go up, but that is not always true, and I acknowledge that. I think that it's important that you do some reflection on the media that you're consuming and that you make your own decisions. You know, it's okay to get input. I think that's a great thing, and I do believe in what I'm reading and what I'm seeing. You know, if you look at the MicroStrategy price action today, it's easy to get super bullish and lose kind of track of. It's easy to get bullish and lose track of what's going on here, right? Look at all these green days. I mean, if you bought in September, you're living in euphoria, right? And we as seasoned traders know that that's dangerous, right? So I think that the future of this company is massive. I am massively bullish on it. Everything I read from like Quant Bros, everything I see just makes me believe in it more. However, I think that can be dangerous. I think that when you're living in euphoria, which I have been, you know, let me show you this right here. This number here is a MicroStrategy trade. I remember putting on Twitter, I said I made more money in MicroStrategy in 2 days than I did in GME in 3 years. Well, that's euphoria, right? It's easy to get carried away. And so this is a long-winded way to say a very short idea that when you are in that echo chamber, just take a moment to pump the brakes and make sure that you're making your own decisions, that you understand the thesis with which you're operating. Because here's what I expect, right? We're going to break this all-time high soon. MicroStrategy is going to go above 201. And I believe that this thing will be off to the races. I'm operating under that assumption. I've got a large Bitcoin position. Large MicroStrategy position. I also have a lot of Bitcoin, but relatively speaking to my net worth, etc., my investment, my portfolio, I consider it to be large. And I'm bullish on this. I think that once this breaks, and there's some other catalysts, Bitcoin rising, right? Them using fair accounting practices, etc. This is gonna take off. That's my thesis. That's also the thesis of, you know, the Twitter world. Jeff, Brian. I want to be positioned for that. However, I think it's important that we do it in a healthy way, right? Irresponsibly long on Twitter. just make your own decisions, folks. Okay? Be confident in what you're doing. Other than that, be good.